Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 7th of June. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. I'm just going to go ahead and bring up our disclaimers. I'll start off with a high risk investment warning. Okay, thank you very much. And here is our market commentaries disclaimer. And just finally, our references Market Scope 2.0 and Trading View. We'll spend our time on Market Scope. I want to take a look at the charts we've been looking at for the week. And the trading for this week has been quite tough in my opinion. And the reason that it's been so tough is that, well, take a look at the candlestick that we have for this week. It's a very short ranged candle. Okay, it's a very short range candle, and it's a doji. So price has tried to be pushed up, not by much, but however much it was pushed up by, it was rejected. Price has been pushed down, not by much, but however much it has been rejected, and we flat for the week. So it's making for a terribly tough trade when there's no volatility. There's not much traders can do with this. And remember, this is the dollar. It's the first link in a chain of causality. So what happens to the dollar tends to filter out, and there is cause and effect that tends to emanate from the US dollar. And we're not seeing that. We're not seeing this at the moment. Take a look at the daily chart, and we'll get some confirmation on the daily chart just how tough the trade has been. When we started on Monday, let's bring in some arrows here as well. When we started on Monday, we had a potential reference candle, and then we had what looked like a bullish confirmation that was rejected. Yesterday, it looked as if we were getting a confirmation of a reference candle to the downside. Strictly speaking, no, I was going to say strictly speaking, it looks like it has completed. It hasn't completed. So we didn't get a bullish completion, and we didn't get a bearish completion. So we've been moving forwards and backwards, and have ended up in the same spot. What you can do is you can take a look at Monday's candle, and you can look at Tuesday's candle, and we can put these together. Let's put these two candles together and see what type of price action we get. So we'll take the high, which would be Monday's candle. We'll take the low, which is Tuesday's candle. Let's just draw in a, okay, we'll draw in a, I'll make it red. Okay, and then what you've got is you've got the open over here. And where's the close? The close is over here. Can everybody see what I'm doing? I'm combining the two candles together, and effectively what we get is a spinning top. Can you guys see that? And it's a long-legged spinning top at that. It's not helping us any which way. It's got, let me just shade this in. Let me just shade this in, I beg your pardon. Okay, extend this, yeah, that's better. All right, so this is the type of candle we've got over Monday, Tuesday. If you were lucky enough to catch the swing on the upside, fair enough. If you are lucky enough to catch the swing on the downside, fair enough. But nothing's stuck, you know. So we flat for the week, and this is making for tough trading. Now take a look at. Let's get rid of this. Okay, I think we get the idea that there is just an amount of uncertainty over Monday and Tuesday. The question now we can ask is, has that uncertainty disappeared? And the answer to that, in my opinion, is no, it hasn't, not yet. And the reason that it hasn't is because we've got here what's called an inside period. Okay, it's still early in terms of the daily candle. So the daily candle is going to evolve over the course of trade for the day. But as it looks right now, we've got a candle that's got a lower high and a higher low. It's completely inside. So bulls haven't had the fortitude to take price higher, and bears haven't had the fortitude to take price lower. And effectively, we are trading inside of yesterday's range. So there is uncertainty when we combine Monday and Tuesday's candle. There's uncertainty when we take a look at the inside period of today's candle. And to top it all off, we're in the middle of no man's land. We're in between the blue bands. Well, that's the neutral area. Well, if we're in between the neutral area, it's very difficult to get a directional bias. So we're getting confirmation on multiple time frames or multiple levels that the market is uncertain. Market is uncertain. And that makes it tough for us as traders. The idea here is you have to exercise caution. You always got to be cautious when it comes to trading because you're inherently assuming risk on every single trade. Well, if there is at least a directional bias, it helps the trader. Here, there's no directional bias. If you take a look at the RSI has come very close to 50 and is flattening out. So the momentum is just flat as can be. I'm concerned about this chart because a lack of direction on the US dollar is going to filter through to other instruments. It's going to make our job as traders more difficult, in my opinion. And I'm looking to see if we get some sort of consolidation pattern here. That would be, to me, less optimal than if we get a trend. So you can see that the US dollar not really cooperating with us at the moment. Let's take a look and see how the euro is looking, considering that there is no directional bias or prejudice with the greenback. All right, take a look at this week's candle. Okay, so we're on the weekly. Can you see this week's candle? It's a short candle. There's no length to the body here. There's no real body. It's an inside pair. It's an inside candle. Last week, we've got a spinning top. This week, we're inside of the spinning top. No real directional bias there either. Let's go through to the daily chart, see if it gives us anything to work with. All right, let's do a similar type of analysis here. Okay. If you take a look at this candle, this is Monday's candle. Here's Tuesday's candle. Can we combine these two candles? Well, if you combine them, you're actually going to get a candle that looks very much like yesterday's candle because the high and the low for over the 2 days is actually charted yesterday. So we'd have to use yesterday's range. We can use the open on Monday and the close yesterday, but the open on Monday is very close to the open yesterday. So we'll get a candle that looks very much like Tuesday's candle. Well, what is Tuesday's candle? It's a spinning top. There's no real directional bias there. Take a look at today's candle. Today's candle, well, there is perhaps a hint of bearishness. Now, just a hint. Why just a hint? Because at the moment, it's an inside day. It's completely inside of yesterday's range. The bears, I can see the real body is tending towards a red real body, but the bears haven't had the fortitude to take out yesterday's low. Okay, there is a little bit more to work with on the euro than there is with the US dollar chart. How come? Because we're not in no man's land. We actually are in zone 3 here. So we do have a directional bias. The directional bias does suggest that there is perhaps some weakness to come in the euro US dollar. If there is, in other words, if we stay in zone 3, which is between the lower blue and the lower red, then I would like to see strength emanating from the US dollar. So it's a dual analysis. So I'd like to see the bulls starting to push the dollar up towards zone 1. If we can get the dollar pushed up towards zone 1, so there is some, let's call it fortitude, again, fortitude coming from the bulls on the US dollar, then we want to see some fortitude coming from the bears on the euro US dollar side. Let's just take a look at the hourly chart here. So again, perhaps a little bit more to work with on the euro. So what we can see is that there is a position in zone 3. The RSR is between 50 and 20. Okay. And if we go down to the hourly chart, a little bit more give here. A little bit more give. Okay. There is a crossover 1. There's a crossover 2. So there's the 2 triggers on the euro. Okay. There's the 2 triggers on the euro. But is it going to work out? I don't know. If it's going to work out, we need to get the stochastic to the lower quintile. That's 20 and below. And we want it to hold in that lower quintile. If we hold in that lower quintile, then we potentially get the swing to the downside. If we get that swing to the downside, again, go through to the US dollar. You want to see the US dollar confirming with a swing to the upside. Okay. So on the lowest time frame that we're looking at, which is the hour, we're not going to go lower than that. It does look as if the short-term traders are trying to take green back up. It does look as if they're trying to take euro down, but the upper trends are just indicative of an uncertain market, and that uncertain market is what we're operating in. Therefore, again, I want to emphasize caution. Right, let's take a look at a few other charts. Let's take a look at cable, see what's happening. We'll do a top-down analysis of cable. Okay, so here's pound US dollar. All right, let's start with the weekly chart. A very interesting chart, one that I'm looking at carefully. And the reason that I think it's interesting is because we are ranging at the moment in a rectangle type pattern. We do seem to be hugging the upper boundary. We've been hugging the upper boundary now for about 5-6 weeks, right? And there does seem to be some sort of rounding towards a breakout. The RSR between 50 and 80, so moving along nicely between 50 and 80. Go down to the daily, now it gets a little bit more difficult. Why does it get more difficult? We're not getting that momentum. Take a look at the candlesticks. Where is it positioned? Where they positioned? They positioned between upper blue, lower blue, no man's land. What about yesterday's candle? Spinning top. Can we combine these two? That's going to be quite interesting. Let's see what we get if we combine Monday and Tuesday. So we'll use Monday's low, we'll use Tuesday's high. Okay. And the open would be near the upper part of the range, and the close would be near the middle part. So we kind of got something like this. Okay. That's interesting. So perhaps a little bit of a bias tail there coming through because of Monday's price action. What's happening today? Inside period. It's completely inside of yesterday's period. What was yesterday's period? Spinning top, candle of uncertainty. What's an inside period? Candle of uncertainty. We're looking to see if we can break upwards and out of the upper range. Well, it's not going to happen unless the cable pairing can get into zone 1. Okay. Now, let's take a look at the hourly chart here. But hourly chart is showing a bit of give. So it looks like there is a push back into that rectangle range on the weekly. So you can see here is crossover 1. Here is crossover 2. So there's the 2 triggers. Okay. Is the short going to work out here? Perhaps. It really depends on the underlying momentum. The underlying momentum will be if we can get the stochastic moving to that lower quintile and holding in that lower quintile, then we shall get some sort of push down. Okay, what you want to do is you want to go back to the US dollar, because the dollar is the second currency. You want to see dollar pushing up then. So there does seem to be hints on the hourly chart. It's just the higher time frames to me look a little difficult, except perhaps on the ones we've looked at this morning, euro at least positioned in zone 3. Now, today is Wednesday, so we're going to conclude at this point. The reason we're concluding at this point is I'm going to go across to the crypto minute. So please join me for the crypto minute, which will get up and running in the next minute or two. Thank you very much, guys.